The broadcast is now starting. All attendees are in listen-only mode.
Hi, my name is Raj Iyer. I'm a faculty at the Imperial College Business School, and I'm just going to tell you about fintech today and give you a sense of my thoughts on fintech. And before I start today's podcast, I just wanted to give you a sense of how I'm planning to structure the next 30 minutes. What I'm going to do is I'm going to talk for 15 minutes, 15 to 20 minutes, and then open up the floor for questions because I know most of you have a lot of questions, which may be the reason why you signed up. Now, let me start today's talk with just telling you a little bit about my background so you have a sense of where I'm coming from. I basically did my PhD in finance. I was a faculty at MIT, and now I'm at Imperial College. My main research area is banking, and I got intrigued by fintech because it was really important for me to understand how banks will evolve and what would society look like in a world without banks, and would banks survive the next decade or two. Now that triggered my interest in studying fintech. Now let me go back to the slides. As you can see, there has been an exponential rise in fintech in the last 5 to 6 years. Now, when you really think about fintech, the question is, what is really fintech? Fintech primarily means application of technology in finance. And the earliest application of technology in finance, which has really revolutionized society, has been ATMs. Now, currently, if you really think about fintech, what the big question that comes about is, why has fintech really taken up and grown exponentially? Some of the reasons for this are the financial crisis. One, because after the financial crisis broke out, people lost faith in large institutions, and they were worried about the system, and they thought that it's these institutions are not credit worthy, and they basically are not doing a good job in terms of providing services. So that was one. The other thing which has really dramatically altered the landscape in finance has been technology. The computing power and telecommunication continue to get cheaper, and it has basically led to access to technology and telecommunication at a much lower price, which has also propagated the use of these in financial services. Third thing has been talent. Lots of people have been laid out or are leaving banks, and this has led to a growth of startups, which basically are tapping into the services provided by the banking system. And last but not the least is, if you think about financing. Now, in a world with loose monetary policy and interest rates being as low as they are, there has been a huge shortage of yields for many institutional investors. So there has been availability of financing searching for yields, and this has also led to easy availability for startup funding. So these factors have really led to an exponential rise in the growth of fintech companies, which are kind of challenging banks. Now, if you really look at it, this is a picture which always has stunned me, in a sense. For every dollar of intermediation which banks have done over the course of the last 130 years, you basically get 2 cents, which are costs which are associated with that, which is primarily what goes into the pocket of the bank. So every time $100 worth of assets pass through the intermediation system, 2 cents of it is captured by the banks. It's a huge sum. Now, this has primarily led to the issue of fintech coming up, like we discussed before, because the costs of financial intermediation have increased exponentially and they're becoming inefficient. You can see this quote by Mark Andreessen, which basically talks about how financial transactions are just numbers, it's just information. You don't need 100,000 people and prime Manhattan real estate data to primarily basically get to think about starting a bank. What you need is, you basically, given the world where the costs of the financial intermediation are inefficient and regulation has crept into the system in a big way, you have non-bank entities cropping up to do things which banks cannot do. So this quote actually summarizes two key points which has led to the rise in fintech. One, if you really think about it, is the costs of current intermediation are large, and there's lots of inefficiencies in the financial intermediation system. That's one. Second thing which has come about is the fact that after the financial crisis, there's been a huge amount of regulation which banks have been subject to. This has led to the costs for banking system again increasing and them disinvesting a lot of their activities which they were involved in. And shadow banks and non-banks have come up to make use of these opportunities. So one is the primary inefficiencies in the banking sector, and the second thing has been the regulation which has led to opportunities of regulatory arbitrage. Now, the question which you basically have is fintech has been growing in different dimensions. The area which I have really worked in very closely has been online lending. So let me just give you a brief of my thoughts on that subject, and we can talk about other areas afterwards if you're interested in it. Which is, if you think about it, one of the areas where first fintech companies started was that they wanted to become the Uber of banking, which is there are people who have money and there are borrowers who need money. They said, why can't we match them? Why do we need an intermediary to match them? Why can't basically we create a platform which basically matches these people who want to lend money with people who want to borrow? And effectively we disintermediate banks of the fees and all the lending which they do, and you'll have a more open marketplace where they'll be matching through these intermediaries. So think of Prosper. That's how Prosper started. Now if you really think about it, what do you need to do this? You need some ability to screen these borrowers, and the second thing you need is some ability to basically collect repayments and other things. Now the question which comes about, given how Prosper has existed in Lending Club, Funding Circle, all these entities which have come about, is can they displace banks? Has Can they basically have all the lending go through them and banks basically do nothing? Now, if you really think about it, that has not happened. In total, even if you take all the peer-to-peer and lenders into play, they really match like hardly 5% at the max of the total loans generated by the banking system. So if if you step back today and think about it, are fintech companies really making a dent in the banking system? The answer would be no. Now, it is true that they are trying to improve the landscape of lending by actually creating efficiencies and cutting down costs. But the big promise of fintech companies was they would lend to people who are not banked or who have it has been difficult for them to get money from the banking system. Now, unfortunately, we've done some research on this topic. The unfortunate truth is that has not happened. There has been some improvement in access to credit, but what fintech companies today are doing is primarily lending to the same companies which have access to bank credit, but they're doing it faster, and they have an advantage because there's less regulation. So their overheads are lower of fintech companies as compared to banks. So I was on a testimony on a panel with the Funding Circle CEO in the US on a Senate, which basically they wanted to think about a House committee which was about regulating shadow banks and fintech companies. Now, one of the questions which was put to him was, out of the 100 loan applications which come to you, how many get funded? And the response was stark. 95% of the applications get rejected. So only 5% of the applications which come in get accepted. Now that's incredible if you really think about it, because the promise of fintech companies was to lend to people who are not banked. But effectively what they're doing is they basically have a faster speed of processing, and they basically can give money and disburse money, and the efficiencies in the process in which the loan is disbursed is high. So they are competing for the same piece of the loan which banks are doing. Now, if you really think of, again, going back, where is the money coming from? If you look at fintech companies and think about it, it's not the average Joe like you and me who's actually going and lending on these platforms to these borrowers. The biggest lenders on these platforms are actually banks. Banks basically use fintech companies to originate these loans and buy these loans back from them. So it's not that they're creating a new marketplace where basically people with no access to credit are getting loans, it is primarily again the same guys who already had access to credit from the banking system who are just coming into the fintech market because it's just faster and easier to access the loans. There is some hope that some part of the fintech companies are targeting unbanked customers, but it's still a hope. It's not something which has completely taken shape. And the other question is, where is the money coming from? It's all coming from institutional investors like banks and pension funds, large hedge funds, because these guys are searching for yields, and they also realize that it's much more efficient in terms of costs to basically use the fintech companies to originate the loans, and they can buy the loans again on their books. It's like securitization at some level where somebody else originates it and you buy it off the book. So if you really think about online lending, there is a lot of promise, but it's still not materialized. The key difference is, are banks basically threatened by fintech companies? Now, if you think about banks, they are, at this point, the answer is no. They're not threatened by fintech companies. And the way fintech and banking has evolved is very different in US versus UK. In US, you basically have fintech companies which initially started with the idea of displacing banks. While in UK, the market has always evolved in such a way that banks act like incubators and try to basically have fintech companies come up, and also the fintech companies which have come up by themselves and the challenger banks at some level have worked coexist with the banks, and they basically work hand in glove with the banks. So in a sense, it's not like they're trying to disrupt the banks and destroy the banks. While in US, the evolution initially was that we're going to displace the bank. But more and more as this market evolves, you see that they're trying to coexist and find synergies where each of them can get efficiencies and share the rent. It's kind of interesting how you think about it. And also, it's another interesting part which has come about in the UK is most of these fintech companies, which started as trying to basically provide services, financial services, have now become banks because they've realized the challenge of running of basically running themselves as individual fintech companies is very high. So therefore, embracing the banking system and becoming a small challenger bank also provides them with wealth of data, access to transaction services, which is much easier to get if you are a bank rather than just being a fintech player. So at the end of the day, if you asked me today, would banks exist in the future, maybe 20 years, 30 years down the line? The answer would be yes. And the main reason for banks to exist is people love the security which banks provide in terms of deposit insurance. And therefore, you and I are going to put our money in banks. Now, given that the wealth of people, a good fraction of their wealth is in the banking system in terms of deposits, you need the money to be utilized. So banks will be important as an intermediary because they hold this wealth of funding. Now, it is true that moving forward, you will see that fintech companies will chip into the services which banks provide. While they will think of payment systems, you can think about lending services, but at the end, banks will basically still be play an active role in terms of holding these assets because that's where they have the money. So they will play an important role in the evolution of fintech, and it's true that the efficiencies of the banking sector will increase, but I don't see banks being completely displaced. At the end, it's a world where you will see coexistence of fintechs and banks and them working with each other, but also you would see the fact that there'd be much more efficiencies on the banking system, and the rents which the quasi monopoly rents which banks enjoy in many settings and many services is going to come down, so consumers will be better off. I think at the end of the day, when you really think about this program, what we are trying to do in is basically provide you knowledge about different areas of fintech. So we basically are going to go through online lending, think about blockchain, think about um, artificial intelligence. So we're going to try to make sure that you, in those 2 days, you get a brief overview of each of the areas, so you can ask the most pertinent questions, and you will hear from people who are actually running firms in them. What are the challenges? Some regulators. So it's a melange of different topics which are dealt in those 2 days, so that you basically have a good landscape of what is happening in fintech. And I would, to be honest with you, it Anybody who tells you that they really know how fintech is going to evolve is not telling you the truth, because nobody really knows how it's going to look like in 20 years. Each one has a best guess. So what we're going to do is think with you and try to provide you the fundamentals for you to basically evaluate for yourself how you think it's going to be evolved. So it's more going to be a debate rather than a monologue, and it's going to be where you and I both participate, and along with other people who are in the industry, to basically build a consensus view on how we think the fintech industry is going to evolve and how intermediation is going to be shaped up. So it's basically a 2-day course, and you have one day where you will have lectures on online lending, and you'll have case studies and thinking about how financial technology, blockchains, and other things work. And you'll also have people who are coming in from Starling Bank and some people from Nuvora who come in, who are actually having fintech companies in this space. And it will be a combination of both lectures and actual practitioners providing you their thoughts on how they think the market is going to evolve. I think I'm going to take a brief pause now so that I can let you all ask questions, because I assume that you would have many. Thank you. So I have a question. How long do you think it will be before a fintech startup can successfully disrupt the traditional banking infrastructure? I.e., when will the Uberization become a reality? So it's a good question, actually. To be honest, I don't think that startups can completely disrupt or destroy banks. What they are doing at some level, think about it, right? Today, if you think of Revolut, which has payment services for travelers, if you think about Monzo, if you think about Starling, I use Monzo. Lots of people basically use these challenger banks because it's just more efficient. Okay, and you can see that banks are trying to build up their digital infrastructure. So it is happening. The question is, it's each piece of the banking system is being picked up by fintechs. It's going to be some time, maybe in a decade, where you will see all these processes have been chipped into and banks have become efficient, and effectively that would improve our experience. I hope I've answered that question. Do we have any other questions? Sorry. Blockchain securities are not yet completely regulated in the UK, but there is a move to actually regulate them, which can actually make the market grow. So I don't think it's going to be long before you will see regulation in terms of UK regulators regulating blockchain securities. That's just going to happen very soon. At this point, there's still discussion, but it's only a matter of time, maybe in a year or two, that you will definitely have regulation on that. For fintech companies, which market is better, US or UK, and also has defined regulatory guidance? Now, I think it is true that for fintech companies at this point, UK is a better market because it allows a lot of disruption to happen, and they are encouraging disruption because they want the banking services to be more efficient. In fact, US does not have a very clearly defined regulatory system for fintech companies, even though there are many of them which are cropping up there. But my prior would be that UK is a better market, and you can see there are a lot of fintech companies originating in the UK which are trying to work with the banks to improve the efficiency of the banking system. What role can people with banking background have in fintech companies if they don't know coding? That's a good question. So you really don't need to be know coding if you basically are in a fintech company. There are lots of people who are coders who basically can do that job for you. What you need to understand is how do you provide better services and what are the holes in the banking system and where could be the efficiencies realized by fintech companies. So you could think of marketing, you could think of interface, you could think of what customer wants, aggregation of data. So you really don't need to know coding to work in fintech companies. My fintech idea is in social investment. How do I find the right people to join me in developing the idea? Example developers. At the end of the day, if your idea is strong, at the end, there's a marketplace where there are developers who you can use or outsource the development platform. The big question is your idea sustainable in the sense that you basically can generate enough traction among funders and the fact that the idea is basically going to be fruitful in the long run. So I would rather, other than worrying about developers, I would rather think about is there merit in the idea that it makes it sustainable in the long run. So there's a huge marketplace of developers which is easy to find. How much of a barrier to fintech disruption and regulatory overhead capital requirements, conduct rules, how much of a barrier into fintech disruption is the regulatory overhead, capital requirements, conduct rules, etc.? I actually think that the fact that what has led to increase in fintech is regulation for the banks. Now, once the key question which still remains to be seen is once you see loosening of regulation in the banking system, which could potentially happen in the US, and you see interest rates rising, would there be enough funding for fintech companies? So currently, the fact that there is regulation in the banking system and fintechs are very loosely regulated has led to a growth in fintechs. Now, once there is more regulation for fintechs or lesser regulation for banks and the interest rates go up, then one could really see whether this market can actually survive. Do you think it is a viable technology for the banking system better than the existing system? Now, the question which has always come about is why can't banks do exactly what the fintech companies are doing? And the answer is actually to be really honest, the answer is banks currently have really horrible legacy systems, and it's very tough to change that. One end of the bank does not talk to the other end of the bank. So the biggest problem for banks to adopt or integrate fintech companies is their existing legacy systems. Is fund selection and robot robo research classified as fintech? At some level, anything which has to do with technology, application of technology in finance is classified as fintech. If you think of robo research, or if you think of robotics for fund selection, or if you think of robotics, artificial intelligence for analyzing data, all that would, which is financial, all that would come under fintech. Are there fintech advisors available that could assess if an idea is sustainable? I think best way to really figure out if an idea is sustainable is at some point you have to basically go to venture capitalists or angel investors and try to get funding. If somebody believes in your idea, that's at least a start that it's sustainable. But there are consultants who basically could help you think through an idea, but I would rather think through the idea myself first, whether it makes sense, and any idea which makes sense, which is easy to implement, would basically attract funding in today's market. So go to an angel investor, and that should help you really understand whether the idea works or not. What is the gray line between fintech and just software? Um, Actually, it's a very good question. There is fintech is just an application of technology in finance. So as long as you basically have any technological interface in finance which actually improves efficiency, that is fintech. So there's not much of a difference. The question is applying tools in software and communications and technology to create efficiencies in the financial sector is fintech. Won't fintechs eventually won't fintech companies eventually be subject to regulation once the market has been geared off? That's a very valid point. Effectively, as they grow and they become try to displace banks, the systemic risk will come about and regulators will be concerned of them, and you will have the same issues of basically regulation. But the one thing you must remember is it's very tough. When you think of fintech, it's not going to be one large bank. You're going to have different players who are going to chip into different parts of the banking system. So at some level, it is still not going to be one mammoth institution which is basically increasing systemic risk. But there will be regulation for sure. How will the barriers of entry, if IP law and patents protect ideas of new ways of doing things? I don't think there is much in terms of IP which the current fintechs have, and effectively it's a way of application, and it's a market where there's a incumbency advantage and a first movers advantage. So I actually don't see IP law as a big hindrance to basically growth of fintechs. Is it advisable to file intellectual property on an idea? There might be an overlap in applications. How do you know which part of the parts to file for IP? I think that's a question which lawyers have to answer for you. I don't think I would be the right person to answer that one. I think I think that is all the questions we have for today. Now, I hope I was able to clarify some of the questions that you had. And if you need to reach out, you can always shoot an email and we're happy to communicate back to you if you have any questions that you've not addressed. And hopefully, some of you will sign up for the program and look forward to seeing you in person here. Thank you.